Hello dear learners, today we will be studying cash flow statements in the subject corporate accounting, and I am Dr. Neelakshi Arora, Assistant Professor, Department of Commerce at the Bhopal School of Social Sciences. Welcome to this lecture. We all know that cash is the king. It's a very old saying, but the financial statements are based on the accrual system. That means we record transactions when they are happening. We do not record as and when the cash is paid or the cash is received. So there comes a need to understand that what exactly is the cash movement in a business. So the financial statements has one part which is cash flow statement. As per the Companies Act of 2013, every company is going to mandatory prepare a cash flow statement along with the financial statements, that is the profit and loss account and balance sheet. Now let us understand the meaning of cash flow statement. Cash flow statement is a financial statement that provides detailed analysis of company's cash inflows and outflows over a specific period. I have already explained you that in accounts we follow the accrual system, so there was no way to find out the exact movement of cash inflow and outflow. So we have started preparing a statement which is known as cash flow statement, which is going to tell you the exact movement of cash inflows and cash outflows within a specific period of time in the business. It also shows you what is the liquidity level in the business. Cash flow statement is a financial statement that also tracks the movement of cash and cash equivalents in and out of business. The primary objective is to find out company's ability to generate cash and to use this cash in the business again. Now, why cash flow statement is important? So as I told you, it measures the liquidity. It helps in the decision making process. Why it helps in the decision making process? So with the cash flow statement, we will be able to know the exact movement of cash in and out. So by that we will be able to find out what are our short term capital needs, what are our long term capital needs, thereby helping in decision making. It also helps you to track cash movement. I will explain you later on that the cash flow statement is divided into three different activities that help you to find out from where the cash is being generated and in which activity the cash is being used. It also helps you to identify the cash flow problems. That means with the help of cash flow statement, we will come to know about any kind of cash crisis that is going on in the business or that might come in the future. It assists you in financial planning and budgeting. It enhances the transparency in the company. We will be able to distinguish between the revenue and the cash flows. This means that in accounts we actually record whenever a transaction has happened, but in cash flow we record it when there is an actual cash payment or cash receipt. So what is going to happen is, if you don't receive the cash, the sale is being booked. So that means in the balance sheet it will be shown as credit sales, but in the cash flow statement it will only be recorded when the actual cash is being received from that debtor. So cash flow helps you to find out the exact cash position of your business. Moving further, I have been using a term very often, cash inflow and cash outflow. Cash flow statement is basically dependent on these two items only: cash flow, cash inflow and cash outflow. Cash inflow refers to actual receipt of money into the business. It increases the cash of the company as well as it increases the liquidity in the firm. Whereas cash outflow refers to payment made by a business. So whatever expenses the business is incurring, and if the payment is made, then that is cash outflow. Let's understand this by few examples. Say for example depreciation. So in depreciation there is no flow in cash. Why? Because if you remember, for depreciation we do a entry as depreciation account debit to asset account. So there is no flow of cash inward or outward. So we say for depreciation there is no flow, and if there is no flow, this will not become part of cash flow statement. Next is cash sales. If you do cash sales, cash is coming into your business. So that means it is cash inflow. If I say credit sales, again there is no flow, because credit sales we do entry as debtors account debit to sales. So there is no flow in that entry, no cash is coming to you. But yes, when the debtor is going to make you the payment, there will be cash inflow. Same is going to be with the credit purchase. There is no cash outflow, because we will do the entry as purchase account debit to creditors account. But yes, when we are going to make the payment to the creditors, there will be cash outflow, creditors account debit to bank account. Whenever you make the payment of expenses like salary, rent, then there is cash outflow. For example, if you have issued shares for purchase of assets, again there is no flow. The reason is, whenever you purchase an asset and you issue shares, so you will do the entry as asset account debit to shares account. So there is no cash involved in this transaction, so it is no flow in the cash flow statement. The last example here is writing off bad debts. Whenever you write off bad debts, you do an entry as bad debts account debit to debtors account. So that means again there is no cash involved in this particular transaction. Moving further, the cash flow statement is basically divided into three activities: operating activity, investing activity and financing activity. Let us understand every activity in detail. The first one is operating activity. Operating activity, as the name is, related to the operations of your business. That means whatever activities are related to sale and purchase of goods or services, related to manufacturing of goods, all will come under the category of operating activities. Operating word itself is operations. Cash flow from operating activity are from the principal revenue producing activity of the enterprise. So sale of goods, sale of services, manufacturing of goods. So whatever is your primary concern, whatever your business is doing, basically that is your operating activity. Examples can be cash receipt from sale of goods, cash receipt from royalties, fees, commission received, cash payment to suppliers, cash payment directly related to business like salary paid, rent paid, insurance paid on stock or insurance paid for manufacturing building. Any such kind of expenses or income is going to come under the category of operating activities. Investing activity. So investing activity, as the name suggests, is related to your assets and your investments. So whenever you buy or sell any long term asset or investment, it is going to come in the investing activity. As the definition suggests, cash flow from investing activity includes various cash transactions incorporating the nature of acquisition and disposal of long-term assets that are included in the cash flow from investing activities, like acquisition of fixed asset, plant and machinery, sale of fixed asset, investment of purchase like shares, bonds, purchase of another company, sale of a business unit. So whatever are your asset nature activities, whatever items are related to your fixed asset or your investment will come under the category of investing activity. The last activity is financing activity. So the sources from where you arrange the funds for the business come under the category of financing activity, whether they are debentures, whether they are equity shares, whether they are related to your transactions like issue of shares, redemption of shares, they all will come under the category of financing activities. So how a company raises capital through debt or equity and how it manages the capital structure, these items will come under the category of financing activity, like issuing of new shares, borrowing money, issuing bonds, repaying debts, all will come under financing activity. Say for example, if you have paid dividend to shareholders, that will also become the part of financing activity. But if you have received dividend on an investment, it is going to be added to investing activity because it is your income received. But if you are an investment company and you have a structure of portfolio management, so whatever you receive the dividend from investing in different companies, that is going to come in operating activity because that is your sole business. whenever we prepare a cash flow statement, there are certain terms to be understood. The first one is net cash flow. Net cash flow simply means cash flow from operating, investing and financing activity. Now, what is net cash flow from operating activity? That is cash inflow from operating activity less cash outflow from operating activity. What is net cash inflow from investing activity? Cash inflow from investing activity minus cash outflow from investing activity. What is net cash flow from financing activity? Cash inflow from financing activity less cash outflow from financing activity. When we add these three, we are going to get net cash flow. The next one is cash and cash equivalents. Cash and cash equivalents simply means the most liquid assets in the business. It includes the balance of cash, it includes the balance of bank and it includes highly liquid investments, which we call it as marketable securities. Those are the investments which have minimum risk. So, it includes three things: cash, bank and marketable security. The next one is net cash used and net cash generated. So, what is this? Inflow minus outflow. If this is positive, inflow minus outflow. If this is positive, so it means you have generated the cash. Your cash receipts are more than cash payment. So, it is cash generated. But if you have done more expense, then it is your cash generated. So, if your outflow is more, it is cash used. If your inflow is more, it is cash generated. Now, there are two methods when you prepare the cash flow statements. First one is direct method, second one is indirect method. For financing and investing activity, there is no difference between the direct and indirect method. But for the operating activity, there is a difference between the direct and indirect method. Direct method simply means that what we are going to record, we will be recording all the items directly. That means direct amount received from customers, amount paid to suppliers, amount paid to for rent, amount paid for salary. So, all the items which are part of operating activity will be recorded directly. But what is going to happen in the indirect method? In the indirect method, we will start with the net income. We will take net profit as base and we are going to do all the adjustments in the net profit so as to reach to the operating activities. But for financing and for investing activity, there is no difference between the direct and indirect method. Both methods are same. So, in today's module, we have basically understood about the meaning of cash flow statement, where I explained you that since the financial statements are based on the accrual system, there is a need to prepare cash flow statement so that we come to know about the movement of cash inflow and outflow in the business. Cash flow statement basically tells you about the inflow and outflow of cash in the business. Further, we understood that cash flow statement is subdivided into three activities: operating, investing and financing. Operating activity means the activities which are primarily related to your business, which is trading of goods or services, manufacturing of goods or services and so on. So, all the expenses and income related to operations of the business will come under operating activity. Then about the investing activity, I explained you investing activity basically relates to your long term assets and your investments. So, any purchase and sale of long term assets and investments or any kind of income received or investments will become the part of investing activity. The last activity was financing activity, where I explained you that all the sources of fund, whether it is equity or debt, will come under the category of financing activity. Then we have understood few terms which are necessary for preparing the cash flow statement. After that, we understood there are two methods for preparing the cash flow statements: direct method and indirect method. I hope it was a wonderful learning. In the next module, we will be understanding more about the direct and indirect method of the cash flow statement. Thank you.